Remember how crazy it was to rent an apartment a couple of years ago? Landlords were calling the shots, rents were climbing faster than you could save, and the competition was fierce. Well, now it seems like things are taking a turn in Singapore's rental market. In the first quarter of 2024, the rental market showed signs of cooling. Let's look at this chart, courtesy of Property Guru. The red line is the demand index and the orange line is the supply index. We can see that the demand has been on a gradual decline since the third quarter of 2022. Meanwhile, supply from both private and public housing projects that had been delayed due to COVID-19 slowly flooding the market. In 2023 alone, there were over 21,000 private homes completed. That's not to mention the newly completed BTO where the owner can rent out rooms even before MOP. In fact, 2023 marked the highest number of completions since 2016, underscoring the substantial increase in available housing. When the supply is high and the demand is low, guess what happens? The rental price then softened. For now, the rental price hasn't actually crashed though. It's more of a flat line with a slight decline. Interestingly, if we look at the number of foreign workforce numbers released by the Ministry of Manpower, the number of EP holders, S-Pass holders, as well as the work permit holders post-COVID-19 are all increasing from 2021 until now. In theory, these are the segments of the population who likely need to rent for housing. But how come the rental market is still going down nevertheless? The conclusion is that although the number of foreign workforce is still increasing, but because the amount of supply is higher, then the price rental index ended up softening. So, besides the increase in supply, what else might have caused the rental market to soften? The first is that there are a number of companies either exiting from Singapore or reducing their footprint here. This causes some of their expats to relocate to a different country as well. I know that this seems contradictory with the MOM data because according to the number of employment passes, S-passes, and work permits, the numbers are actually still increasing. But I think the data point that is not open to the public is the exact salary range of these expats and workers. If they are high-income earners, most likely they will bring their family, causing them to rent the whole unit. Versus if they are low or medium-income earners, then they are more likely to rent a room or share a unit together with several other workers in co-living situation. I think what most people don't know is that in reality, there are more and more expats who come here on a local package, meaning they are paid a salary at par with what the company would have paid if they hire a Singaporean and there's no housing support. This will mean their salary would only be sufficient to rent a room, co-living, or rent a studio, but not to rent a big 3 or 4 bedroom units. Another potential factor is the economic slowdown. With inflation on day-to-day spending and retrenchment here and there, I'm guessing some youngsters are probably more cautious before moving out from their parents' home. Although many people crave independence and freedom, but at the end of the day, if their finances are not there yet, they probably would have just stayed with family and saved the money, maybe to buy their future house or for other purposes. You might ask, what about RTS? Well, since RTS is still not operational yet, hence the current rental market softening has nothing to do with it. But once RTS is done, yes, there might be some impact on the Singapore property rental market. If RTS can truly provide an easy commute, some people might just consider living in JB and just commuting on a daily basis, especially for those who are working in companies that offer hybrid mode where they can work from home a couple of days a week. This could potentially lower the demand for rental properties in Singapore, particularly in areas close to the border. If the demand is lower, but there are a lot of supplies, then some landlords might have to consider lowering their rental price to make it more attractive for tenants. But I don't expect this to have much impact on the central core region. I mean, if a renter is originally was thinking of renting in Woodlands, they might as well just rent in JB, right? But if they are planning to rent in Novena, for example, I don't think they will rent in JB because it's too far of a stretch. So what can a landlord do? The softening rental market in Singapore can be a challenge for landlords, but there are still strategies you can use to stay competitive and attract tenants. Here are some options to consider. The first thing I would suggest is to be more flexible with the tenant profile. The harsh reality is many landlords prefer renters from certain demographics. For example, prefer them to be Caucasian expat families or prefer single females from a certain race, etc. If you are more open to diversity, you should be able to rent out your unit faster. The second one you might want to consider is to be more flexible with shorter leases. I understand that most landlords prefer 2 years, but some renters might be hesitant to commit to a long lease in a softening market. Offering shorter lease terms like 6 months or 1 year could be appealing. Another thing you can consider is to enhance your property's appeal to at least make it more livable. For example, you could repaint the unit, fix any obvious maintenance issues, change the curtain, buy a new bed sheet, etc. It doesn't have to cost much, but ideally your unit should give a better first impression in pictures and when a potential tenant visits your place. The next tip I would suggest is to go easy on the rules. I've heard about landlords insisting that tenants cannot be at home from 9 a.m. to 6 p.m. or can only use the washing machine once a week, can only shower for less than 5 minutes, and many more. If you have strict rules and you have high turnover of tenants, you might need to reflect on whether you have gone overboard or whether you are actually mentally ready to rent out and share your flat with a stranger. At the end of the day, they are human beings as well and not just a profit maker to your financial freedom. If you are finding it challenging to manage the rental process on your own, my suggestion would be to consider hiring a property agent. Or if you already have one, perhaps you should consider hiring a better agent. A good agent should be able to highlight the unique selling points of your flat, take better photos, and market your unit better. Last but not least, if everything else fails, then you might want to reduce your rental asking price just a little bit. You should check the current market trends and adjust your expectations based on that. I understand that everybody wants to make the most profit possible, but you gotta be realistic as well. Check rental listings for similar properties in your area to get a sense of what's competitive. If you are wondering what is the impact of RTS on Singapore property market, check out my other video in the description. Don't forget to like and subscribe, and I'll see you in my next video. Bye bye!